We've all heard the stories about someone who finds an old knick-knack, vase, or painting in their attic that ends up being worth an unexpectedly large amount of money. Well, Mike Coben, who heads up business development at Lighthouse Life, is here to explain how people can find the hidden value within their life insurance policy that may be just sitting in their drawer. Mike, how does this work?
Well, Melanie, typically when people buy life insurance, they buy it and they put their policy in a drawer, and they really never look at it until many years down the line. And they could be sitting on a significant amount of lifetime value that they may not even realize that they have access to. It's very similar to if you bought a antique and you put it in your attic, and the antique was a painting, and you were like, well, I don't know if I ever use this antique. I'm not sure where it fits in the kitchen, but lo and behold, the day that you sell the house, you find the antique again, and the antique painting again, and you bring it out and you get it appraised, and it turns out to be a valuable Van Gogh, and you sell it for a tremendous amount of money that you could utilize for moving, your retirement expenses, etc. Well, life insurance could be similar in terms of having a value that you don't really know until the policy's appraised, and life insurance can be appraised for a market value that could exceed a significant amount above what the insurance company typically could provide in its surrender value, or possibly just lapsing for very little value at all. And that process of appraising a policy and selling it to institutional purchasers is called a life settlement. And it's really for seniors that have changing needs, and they bought the insurance for good needs at the inception, whether it was for spousal protection, for business insurance. And then down the road, they decide they don't really need the policy or want it or can't afford it anymore. And they have an exit strategy that could provide significant revenue for them that will take care of current needs, such as healthcare or retirement income needs.
Okay. So you said this is good for seniors, so it sounds like everyone who has a life insurance policy that isn't the best fit for. So who is the best fit for
So
this?
typically it's insureds or policy owners that are 70 and above that, as I said earlier, have deemed that their policies are too expensive to continue, or their needs have changed and they really don't need the insurance anymore.
Okay. And realistically, how much money can a person get if they sell their policy in a life settlement?
That's a great question, and it's very difficult to answer because it depends on the individual circumstances of the policy and the individual that's the insured. But the industry has seen that the value generated from a sale of a policy, if it does have market value, is significantly more than what the insurance company provides, significant in the tune of 4 times greater than what potentially the value is in the policy itself from the values from the insurance company.
Okay, so if people can get that much money, why aren't more people doing this?
Lack of awareness. Companies like Lighthouse Life, which I represent, are really geared for educating the general public in terms of greater knowledge of the marketplace or the existence of the marketplace, and also spending a lot of time with advisors. Anyone that's advising a client on their financial affairs, inclusive of their life insurance. We are, as an industry and as a company, really spending a lot of time educating advisors in providing this valuable option to clients that may not even really understand or realize that they have some significant value that is sitting in their attic that they're just letting the value be unrealized.
Mm-hmm. So what do you recommend that policyholders do? What should advisors be doing for them?
So I would suggest that if a senior becomes aware of the fact that they don't really need their insurance anymore, they can't afford their insurance, that they should approach their financial advisor to investigate this exit strategy as a possible exit strategy. Also, as a financial advisor, if a client approaches them and says, the policy I purchased in the past, I don't really necessarily need or want or can't afford, or I have a need to fund a shortfall in retirement now, as they may be discussing currently with their advisor, or needs for funds to take care of current health care or long-term care costs. That's when an advisor should say, based on your current circumstances, I think we should consider valuing your policy and seeing if it has a market value that we could use for your needs today. As I said earlier, it's like digging that painting out of the attic and realizing the value and utilizing the value for your current needs.
Yeah, just getting it out of the drawer instead of the attic. All right, thanks, Mike. Appreciate you taking the time to explain.
Thank you very much.
And if you would like more information on how you can find the Van Gogh in your attic, visit lighthouselife.com.